90 million is how many users Binance, the largest cryptocurrency exchange in the world, has. And it's getting sued by the Commodity Futures and Trading Commission for allegedly breaking the law. That's right, Binance is in hot water for allegedly selling unregistered commodities and enticing US individuals to open accounts, along with allowing terrorist organizations to launder money. Let's get into it, starting with the facts of the lawsuit. Binance is a platform where you can trade digital assets or derivatives using something called order books. These books prioritize transactions based on price and time, but you can also trade in other ways, like over the counter, aka OTC, or use Binance Buy Crypto feature to get your digital assets directly from them. It's like ordering food from a restaurant. You can choose from their menu, the order book, or go off menu and ask the chef for something special, OTC. Binance earns most of its money through transaction fees, which are charged to customers for trades made on its platform, with a significant portion coming from US customers trading digital asset derivatives. In 2019, Binance made $63 million in fees from derivatives transactions. 16% of that was from accounts Binance itself identified as residing in the US. By May of 2021, the amount of fees they made from derivative trading skyrocketed to $1.14 billion. Binance is alleged to have illegally offered financial products like futures, options, swaps, and leveraged commodity transactions involving digital assets to U.S. residents without proper registration or oversight by the U.S. Commodity Futures Trading Commission. The allegations suggest that the CEO of Binance, CZ, directed these activities with the assistance of the CCO, Lim. This was hella profitable for Binance as it grew its customer base to the millions. Among the millions of its customers, Binance refers to its important customers as VIPs. Binance's VIP customers are often institutional market participants, aka these are the customers who conduct a lot of trades for a lot of money. VIP customers are important to Binance because they provide liquidity to Binance markets, and more importantly, they pay Binance a lot of fees. Binance knows its VIPs' identities and geographic locations. Binance categorizes its VIPs into levels 1 through 9, with VIP 9 being the highest level occupied by the most important Binance customers. Another important benefit that Binance has provided its VIP customers is prompt notification of any law enforcement inquiry concerning their account. This is called tipping, and it is illegal according to FinCEN. If a law enforcement agency like the FBI is conducting any type of investigation, the company is supposed to keep that information confidential, because if the customer finds out, they can close their account and move to a new company. This prevents law enforcement from being able to track where the illegal money is flowing. According to the CFTC complaint, Binance instructed its VIP team to notify a customer at the point of account freeze based on a request from a law enforcement agency, and immediately after the unfreeze, which typically occurs 24 hours after the account was initially frozen. The VIP team is to contact the user through all available means, text, phone, SMS, to inform him or her that their account has been frozen or unfrozen. Now, Binance said do not directly tell the user to run, just tell them their account has been unfrozen and it was investigated by X agency. If the user is a big trader or a smart one, he or she will get the hint. Now, this is crazy. Imagine having customers that you have to tell your employees, don't tell them to run. Maybe Binance should offboard those types of clients, but that would mean Binance would lose money from the fees, and the most important thing to CZ were the fees. And they didn't stop there. When Binance employees discussed US customers, they were instructed to use the messaging app Signal because of the auto delete feature. CZ had also instructed Binance officers, employees, and agents to use Signal to communicate with US customers. Making money from the trades wasn't enough though. CZ needed to increase the bottom line at all costs, and a great way to do that was with proprietary trading. But Binance did not disclose to its customers that it was trading in its own markets, in its term of use, or anywhere else online. Proprietary trading is when companies use their own money to trade cryptocurrencies rather than trading on behalf of clients. However, for Binance to engage in proprietary trading on its own platform, it means that the company could have used its position as both an exchange and a trader to gain an unfair advantage in the market. For example, Binance could have used its access to order book data and customer transaction information to make informed trades ahead of its customers or to manipulate prices in its favor. Order book data is a real-time record of all buy and sell orders for a particular digital asset on the platform. Another way Binance could have gained an unfair advantage is by using its own capital to create artificial demand or supply for a particular cryptocurrency. This could be done by placing large buy or sell orders on the platform to manipulate the market and force the price to move in a certain direction. In addition, Binance could have traded on insider information that is not available to the public, such as knowledge of new listings or upcoming market events, in order to gain an unfair advantage. Binance's involvement in proprietary trading on its own platform raises a ton of concerns about conflicts of interest and the potential for the company to use its status to gain an unfair advantage in the marketplace. Now, according to the lawsuit, the CEO, CZ, 100% knew exactly what was going on, both about the proprietary trading and the amount of U.S. customers on the exchange. CZ personally interacted with Binance's U.S. customers. For example, in 2017, in connection with Binance's early phase of targeting U.S. customers, CZ provided instructions to a U.S. resident over Telegram. Later, on January 8, 2018, a U.S. trading firm emailed CZ directly to onboard to Binance. CZ also received periodic reports concerning the nature and geographic location of Binance's customers, as well as the sources of Binance's revenue. CZ has been able to have the control he has due to how the company is set up. It's very similar to FTX. See, Binance relies on a maze of corporate entities to operate the Binance platform. This decision is deliberate. It is designed to obscure the ownership, control, and location of the Binance platform. With this type of power, CZ was able to effectively handicap the entire compliance department. For all intents and purposes, the compliance program was just for show. For approximately the first 2 years of its operations, Binance did not take any steps to limit or restrict the ability of U.S. customers to trade on the platform. Even after Binance began to purportedly restrict access to its platform, it left open a pretty glaring loophole for customers. Customers were able to sign up, deposit assets, trade, and make withdrawals without submitting to any KYC procedures, as long as the customer withdrew less than the value of 2 Bitcoin in one day. This loophole was kept open for 2 years. In July 2019, the value of 2 Bitcoin was $22,000. In March 2021, it was more than $100,000. For the average customer who conducts a few trades, they're not going to be anywhere near $22,000 per day. This withdrawal limit was meaningless, and the company knew it. CZ also stated that the under 2 Bitcoin users is a very large portion of our volume, so we don't want to lose that. And he knew what he was doing, he just really didn't care. They claimed to have made a change that would block US users based on their IP address, but in reality, all Binance did was add a pop-up window on its website that appeared when customers attempted to log in from an IP address associated with the United States. The pop-up did not block customers from logging into the account, depositing assets, or trading on the platform. All it did was ask them to self-certify that they were not a US person before accessing the platform, which means they had to click one little button in the pop-up. It's like an annoying captcha box. We check boxes every day that we have no idea what it means. Let's be honest, you go to a website, you see the box, you click, you put your information in, and you click I agree to the terms. You have never clicked on what the terms actually are. Most people don't. To show you that the pop-up didn't even matter, before they did the pop-up, 19.9% of Binance customers were from the US. And the year after, 17.8% were from the US. Now keep in mind, during this time, the amount of customers using Binance took off. So for it to go from 19 to 17 with way more customers clearly means the pop-up had no impact. Now Binance, and more importantly CZ, knew that the compliance department was a joke. The CCO at the time said that Binance's compliance environment has amounted to email sending and no action for media pickup. I guess you can say it's for show. This really meant that the compliance department would send out emails and notices solely with the knowledge that the media will pick this up and report on it. But the actual email had no teeth and wouldn't result in any meaningful change. Here's an example. In a letter to a regulator, the CCO of Binance said that the company has anti-money laundering controls, it screens all customers against OFAC sanctions, and does customer due diligence. This letter was dated August 14, 2019. 4 months later, in an internal message to one of his colleagues, the CCO Lim admitted that the .com, meaning the global entity, doesn't even do AMO name screening or sanction screening. And Binance wasn't just lying to the US, it was lying to its partners too. Paxos, the US company that issues BUSD, which is the Binance stablecoin, also was lied to. See, as a part of the agreement between Paxos and Binance, Binance had to undergo a compliance audit. Now, this is a standard clause when you have two companies working together. Now, according to the CCO, Binance purposely engaged a compliance auditor that would just do a half-ass individual sub-audit on geofencing in order to buy them more time. Typically, when an audit is done, the money laundering reporting officer needs to write an annual report that is reviewed by the company's board of directors. The MLRO is typically a senior member of an organization's compliance team and is responsible for implementing anti-money laundering laws, policies, procedures, conducting risk assessments, and monitoring transactions to identify any suspicious activity. While at Binance, the MLRO pretty much said that she needed to write a fake annual report to the Binance board of directors. WTF. Just to show you how bad it was, the money laundering reporting officer said in a chat to the CCO, "I has no confidence in our geofencing." But the issues for Binance don't solely rely on the fact that they allowed US people to access the platform. No, Binance appears to have been a breeding ground for illegal activity. For example, in February 2019, after receiving information regarding Hamas transactions on Binance, the CCO explained to a colleague that terrorists usually send small sums, as large sums constitute money laundering. That's wrong, but that just shows you their lack of knowledge. The colleague actually replied and said, "You can barely buy an AK-47 with $600. And with regard to certain Binance customers, including customers from Russia, the CCO acknowledged in a February 2020 chat, like, come on, they are here for crime. They knew exactly what these customers were doing. There was no misconceptions as to why these people were here using the platform." And the money laundering reporting officer agreed and said, "We see the bad, but we close two eyes. You can't get any more blatant than that." And the issues only increased. In July 2020, a Binance employee wrote to the CCO and another colleague asking if a customer whose recent transactions were very closely associated with illegal activity and that over $5 million worth of his transactions were indirectly sourced from questionable services. Should he be offboarded, aka kicked off the platform, or was it in the class of cases where we would want to advise the user that they can make a new account? Or was it in the class of cases where we would advise the user to make a new account? The CCO responded and said, "You can let him know to be careful with his flow of funds, especially from darknet like Hydra. He can come back with a new account, but this current one has to go. It's tainted." Essentially, Binance said, it's cool to still work with the client. They just have to create a new account under a different identity. During all of this, Binance was also pushing the use of VPNs, going so far as publishing a blog post telling customers that a VPN could help them disguise their actual location, if they were into that sort of thing. But some US customers didn't get the memo. They just started using Binance.us as any regular law-abiding citizen would. But CZ and the CCO used Binance.us as a way to find the whales. If an employee came across a whale, they were told that if their volume is really high, they will essentially make an exception and move them over to .com. The .com website is what the rest of the world outside of the US use. It's where traders had access to all kinds of products, and as a result, Binance can make even more money. As Lim said, they need to be doing really sick-ass volumes. We always have a way for whales. Binance even directed the VIP customers to create shell companies in places like the British Virgin Islands and the Cayman Islands, and then submit paperwork to the Binance.com entity to open an account. This way, they're able to evade the .us restrictions, and Binance made sure that this process was seamless. There would be no disruption to the client's trades. The only thing that they would see is that the name on the account changed. The entire time, they knew what they were doing was illegal. What other reason would make the CCO say that such instruction should only occur in secret? But one of the few truly dumb mistakes Binance made was making their VIP process into a formal policy. It was titled VIP handling, and CZ, the CEO, contributed ideas that made up the finalized version. It's literally giving the regulators what they want on a silver platter. Binance also deliberately concealed the location of US customers by changing the internal database location from the United States to report as unknown. And this change was made by none other than CZ. So what's going to happen now? Truthfully, I expect Binance to pay a fine. The amount will be large enough for the regulators to make headlines, So something like maybe 72 million. But given that Binance made $12 billion in 2022 alone, I don't anticipate it affecting the company much. Binance is the largest exchange on the planet, and with that size comes a ton of power. But don't worry, this won't be the last lawsuit against Binance or crypto for that matter. New platforms popping up the NFT marketplace are allowing crypto whales to break a centuries-old law, and it's causing newbie crypto investors to lose their money. So if that's you, you want to check out this video right here.